And welcome back to Bhavani JAIIB. Today we are talking about retail banking, especially made for Indian bank employees aiming to crack JAIIB. Today we are going to explore retail banking basics together. In our journey through paper 4 module B, we start with the fifth unit, customer requirements. Here, we are going to learn about retail products overview, approval process for retail loans, segmentation of customers, Maslow's theory and customer requirements about service quality and satisfaction levels. So we will first have a overview of the retail products. See, this we already know because most of us are working in the branches where we are mostly dealing with the retail banking products. Retail banking products can be broadly classified into retail liability products. So, what do you mean by liability products? We already know that from the asset and liability table, that is the balance sheet, we know that the liability products are the CASA and TD, etc. CASA means our savings bank and current accounts, and our fixed deposits. All these things come under the retail liability product. Whereas the retail asset products have all types of loans. Suppose, say, the housing loan, vehicle loans, education loans, MSMEs. All these loans are coming under the retail asset products. The other products that we have here, or the other products or services we have, are the debit cards, credit cards, mobile banking, internet banking, insurance policies, etc. Here, the target customers are individuals, joint borrowers, whom we have the operating instructions as these either or survivor or either and survivor, like so, and employees of the proprietorship or partnership firms or companies. Here we are talking about the employees of those firms, not the owners. Okay, keep it in mind. And then next we have the NRIs, the HUFs, and the trust associations. So all these things are the target customers when it comes to retail banking products. So retail banking products are volume driven, and features related to who will qualify and who will not are predetermined. So volume driven in the sense that we are actually trying to focus on the masses and not just individuals. Okay, so this is about the retail banking products. Next is the approval process for retail loans. The first step is collection of application and information. So you're first collecting the application and the information. So in here, you will be doing the verification of the KYC document of the loan application. And then you will have you will also do the, like you have to make sure that it is AML and KYC compliant as per the RBI norms. Next is the due diligence, where the application details are verified. So once you have collected the application, here you will be verifying the application. So what do you do in this? In different loans, you will be doing due diligence in different ways. So you must have heard this word due diligence, wherein people say that you have to follow proper due diligence before you are giving any sort of loan. So here in case of a housing loan, RERA, that is the Real Estate Regulation and Development Act 2016 permission, that is the RERA permission is a must now. Okay, if you want to buy a house, and the developer's market standing has to be checked. So whoever is the developer, so that market standing has to be checked. In case of a vehicle loan, the invoice is collected. But in case of education loans, we'll take the admission and fee details and we'll verify that. And also in general, if you have to say, you have to verify the KYC, the PAN you have to verify from the IT website. So all these things are something that we usually do. If you're in advances, you will be knowing this. Even otherwise, this KYC and all will be done in all the departments. And then we have the credit report from credit information companies like our CIBIL, Experian, we have CRIF Highmark. So all these things are the credit bureaus from where you will take the CAC scores, right? Next will be house visit to ensure the address. So you have to visit the house to ensure that the person is living in this address. Many a times it so happens that the person actually gives a fake address and the person is actually not living there. So to verify this, you need to also visit the house. Next is the telephonic verification. You can also do a verification through phone, that is whether the person is using the same mobile number. Then we have something called the vetting of security documents. See, vetting here means careful and critical examination of these documents, which is usually done by uh, a legal advisor, or there'll be a specific valuer also to do this. So there'll be somebody who evaluates the documents of that particular property, and this is called the vetting. Next, we have the title investigation of the property. That is when we are giving the title deeds. The sense if we are doing a EMT, a equitable mortgage, then we have to investigate that particular title of that property. So these are the things which come under the due diligence. Next, we will be going to the quantum of the loan. The third one is the quantum of the loan. See, quantum of the loan means what? It means how much amount of loan is decided on what basis is it decided. Quantum of loan is either related to the product or the income of the individual. It varies from bank to bank, obviously. So each bank has different ways of calculating how much they will be able to give. So margin may vary from 15% to 30%. 15 to 30% of the value of the asset, depending on the type of the loan. Again, it could be housing loan, vehicle loan. Based on what is the type of the loan you're giving, the value will be decided. So here we come to know something called as the LTV ratios. Especially talking about a housing loan, it is calculated by dividing the loan amount by the appraised value of the property. This I'm just telling you like as a brief explanation of how LTV is calculated. Suppose in any case, if the LTV ratio is 80%, if I have to tell you in simple terms, the lower the ratio, it is better. Why? Why? Because if you are borrowing less, I mean, suppose the person who is borrowing the loan is borrowing less compared to the value of the house. Suppose the value of the house is suppose say 1 crore, but he is just borrowing suppose say 80 lakhs. So here what happens? In that case, if at all the person defaults, okay, the bank is in a safer position, because if suppose a person is unable to pay back, they can sell the house and then they're more likely to get all their money back along with the interest. So this is called a LTV ratio. So this is something that they say usually when it comes to housing loan while they're calculating the quantum of the loan. Next is a repayment period. It may vary from 3 years to 30 years based on what kind of loan you are giving. Usually, housing loans will have more number of years, and also it is dependent on the purpose. In order to ensure that the loan repayment does not result in any difficulty for lifestyle, okay, so banks ensure that net take home is maintained after all the deductions. So this is the calculation that we usually do. Net take homes are being calculated dependent on the type of loan. It will vary from 30%, it could be 25%, so it could be 40% also. So based on what type of loan you are giving, this net take home varies. So this is about the approval process for retail loans. It is even more extensive, but I've just covered the 4 steps that requires for you to see before you are giving any type of retail loan. Next, we will be talking about the customer segmentation. So what do you mean by segmentation? Segmentation means you are dividing the customers based on something. So here, what is that something? We'll see. See, before we talk about this income levels and the customer segment, we need to understand that customers are the key attribute of any retail banking. Different customers have different needs, and customer segmentation is important for retail banking to be successful. So this is the reason you are actually dividing the customers into different segments. The basic segmentation of the customers are like this. Here we have the income levels in lakhs per annum, and here we have the customer segment. Say 2 to 10 lakhs, as you can see here, 2 to 10 lakhs is mass market, it is called, and 10 to 50 lakhs per annum are called as the mass affluent. See, affluent here means having abundant or a lot of wealth. a lot of wealth or money. Mass affluent means people who have a significant amount of money or assets, but they're not considered super wealthy or ultra rich. So these are the people who are called as a mass affluent. Next, we have 50 to 400 lakhs per annum income level who are called as a super affluent. Here you can say these people are like the rich category, they come under the richer category. But next is the 400 to 4,000 who are not the who are called the high net worth individuals. High net worth individuals means that these people have the access to invest in different types of investments other than what usually these people invest. Okay, like they invest in stocks, they invest in real estate, and so forth. And similarly, 4,000 to 12,000 super, they are called super high net worth. And more than 1,20,000 lakhs per annum are considered the ultra high net worth individuals. So here, our focus is not on these high net worth individuals. Our focus is more on these three segments, such as the mass market, mass affluent, and super affluent, because these are the people who get into the retail banking products. Because these are the ones who are not really interested in retail banking products, but mass market, affluent, and super affluent are the ones who want to take such kind of retail loans or retail products in order to lead their life. So this is the customer segmentation. Next, we will move to the Maslow's theory and customer requirements. Okay, see, Maslow is actually a psychologist who came up with this a pyramid, you call it, is the need pyramid. So first we will look at what the Maslow's theory actually says and how we can connect it with the banking products. So the first we are going you know uh, down to up. So we are going from the bottom most of the pyramid, which is the physiological need. So physiological need means what is required for the body to survive. So it is more like food, water, warmth, or you can say shelter, and you need rest. So these are the physiological needs. Next is the safety needs. So here you can just have a look. These two come under the basic needs. Okay. So safety needs is a security and safety from usually it was from predators, but now it is like general safety needs like security and safety. And the next is the belongingness and love. So this is also a need to have intimate relationships like husband and wife, or with children, or with parents. So all these kind of belongingness and love needs, and also with friends, most important. So these are the psychological needs. Next is the esteem needs. Esteem means prestige and the feeling of accomplishment, that you have achieved something in your life, also is a need. Okay, so keep in mind esteem is also a need. At the topmost of the pyramid is something called as the self actualization. So this is something usually our people who are into a full achieve, people who have really achieved everything in their lives actually reach this particular end. Okay, usually this goes from here. You're starting from the physiological needs, safety, belongingness, you go to esteem needs, and then you go to the self actualization. Here you're achieving, once you are achieved the full potential of yourself, and you have, you're including the creative activities, you have actually achieved everything. This is your full potential. Here they say that it is the place where you realize what is the actual purpose of your life. So it is more philosophical here, and this is also called the self fulfillment need. Now we will look into what it takes to be like this physiological needs, how it is connected to the banking products. So that is the whole purpose, right? So the physiological needs, we have the core savings account, personal accident cover, and housing loans. So here we can also see that the physiological needs is for those who are at their younger age. Okay, so this also goes with the age. This pyramid goes with the age. So here we are talking about the core savings account, personal accident cover, and housing loans. When it comes to security and safety needs, later, much later in life, people will go with the RD, FDs, life insurance products, etc. Okay, when they have a family kind of a thing, right? When they start a new life with their partner, that way. So next is the social needs. Here you might need the consumer loans or personal loans might come into picture. Next is the esteem needs, where people might do special. They're now probably comfortable with their financial position. So now what they do is they'll be doing the special term deposit products and term insurance products. Okay, because just in case something happens to them, the money has to go to the children who might be studying, etc. So then next is self-actualization needs. Self-actualization needs is when the person has almost reached his, he might be a senior citizen, is about to be a senior citizen. Here, usually what they take up is they take up these pension loans and they take this SCSS, that is senior citizen saving schemes, pension plans, and all these things they opt. So this is about how the person goes from this physiological need to the self-actualization need with respect to the banking products. Next is the customer requirement about service quality. See here from the picture you can make out that dependent on how the service is, right? The emoticon is changing. So if the actual service is better than the expectation, it is called as the customer delight. The customer is delighted if the actual service is better than the expectation. But if actual service matches the expectation, then it is called as the customer satisfaction. So he expected something, you're giving him that, then he is satisfied. But suppose say he was expecting the act he is expecting something, but your actual service is very less than that. Then what happens? Customer is completely dissatisfied with you. So this is something that should never happen in a bank. Okay. So we are always looking at a customer delight. If you are giving him better service than what he expects, he will always come back to you and he will bring more people into the bank. So this is the thing. This you should focus more on this. Okay. Next, we will move on to the service quality requirement. So this is more in addition to what we just spoke, as in like the satisfaction of the customer. So based on that only, we have other things to look at. What is called as tangibles. Tangible means something that you can really measure or see, or so the appearance of physical facilities, that is with respect to branches, right? And the equipment and how the personnel, that is the banking staff are, and the communication materials. How well have you put your notice board? How well have you maintained? All these things matters a lot. Next is the reliability. Reliability means ability to perform the promised service dependably and accurately. When you have promised something to a customer, you should perform it accurately without making any mistakes so that he trusts you and depends on you the next time he comes to the bank. So this is reliability. Okay, next is the responsiveness. Responsiveness is willingness to help customers and provide prompt service. See, many of the brand staff usually tries to avoid customers, especially the problematic ones. But this willingness of helping the customers, that motto, if you have, then that actually reflects. So this responsiveness is also very important when it comes to the quality of the service that you are providing. Next is the assurance. Assurance is it consists of competence, courtesy, credibility, and security. See how competent you are in providing the retail products, and what is your courtesy, how courteous you are, what is your credibility, and the security that you offer along with these products. All these form the assurance that you are giving with respect to a product that you are selling. Next is empathy. It consists of access and communication. So, how well are you able to empathize with your customer? So, that also matters here. Okay, next is the value. The value the customer, how how well you're valuing the customer, his business, and time. It matters a lot. You should actually value all these things, and that is when they will realize that this bank is actually performing really well. So the service is really good, is what the customers feel when you are valuing their time. The other things apart from these six that I mentioned here is you have to provide solutions and not excuses. So you should never, we always come out with an excuse but never a solution. So always be solution focused. You should always try to give a solution and not an excuse. And also to understand customer queries and concerns. So you should first understand their query, their concern, and then you have to respond accordingly. So these are the things when what comes under the service quality requirement. Next, we'll move on to the satisfaction index. See here, we are just talking in general terms. Okay, we are here we are trying to say that the private sector banks actually lead in the savings account and credit cards. Okay, they are the leading banks now when it comes to savings account and credit cards. Public sector banks, they are leading in the home loans. So they have captured the housing loan market, and foreign banks are also capturing the housing loans and credit cards. So these are the three banks trying to capture the market in different retail products. Okay. So far, what have we learned? We have learned the retail products overview. Okay. We have learned the approval process, that the four steps that I spoke about. Segmentation of the customers based on their income levels. Maslow's theory, as in that the physiological needs, the basic needs, the psychological needs, and the self actualization or self fulfillment needs with respect to the banking products. And then we spoke about the customer requirement, about service quality and satisfaction levels. What are we supposed to do in order to give better quality service to the customers? So these are the things that we learned so far. So don't forget to subscribe for more insights into the world of banking. Stay tuned, stay informed, and keep banking the Bhavani JIB way. Thank you. And next up, we will be learning the next unit, that is the product development process. Until next time, happy banking.